Hello folks, welcome to Pro Trader Strategies Market Commentary. My name's Eric Wilkinson. You may recognize me as the Wolfman, but I'm here to teach you guys some different option strategies you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. Nothing really to see across the pond. We did get Italian retail sales coming in at negative 0.7%, expected to be a positive 0.2%. Now moving back over here to the United States, we got the NFIB, which is the National Federation of Independent Businesses Small Business Index. Is what it really is it's a survey of the small business owner and asking them what their economic outlook is and their environment in and around their communities. Well, it came in at, 103.3, right in line with expectations of 103.2. That's actually a pretty good reading. When we get these readings above 100, that is good for the economy. Especially, I'd like to see the small businesses doing well because they are really the ones that generate velocity of money. A great big company sucking in a bunch of money and one person making a lot of money in that corporation does not create the velocity of money as we see with these smaller businesses. So that is a driving force of the economy. They're doing well. That is a good thing. And then we got the housing starts coming in at 246,000, expected to be 209,000 in revision to last month's number. Was down slightly from 202,000 to 197. That revision not making up. That downward revision not really taking away too much from the big beat on the headline number for housing starts. And then we got the building permits coming in lower than expected at negative 13%, expected to be a negative 10%. Revision to last month's number up slightly by a couple of percentage points, but it's not going to make up for the headline miss of the 3% miss. One thing to note with the building permits, if you've watched before, you've heard me talk about this till I'm blue in the face. Just because you're pulling permits or not pulling permits, it isn't really a very great gauge of the overall economy, because if you're pulling a lot of permits, it doesn't mean you have to build. You're just getting the possibility of building. When you're not pulling permits, well, it doesn't necessarily mean you're not going to build either, because you may have all these permits backlogged that you're waiting to start building. Now, we're seeing some of that with housing starts also. You get this big influx of housing starts. Well, the builder isn't really concerned about bringing on new permits because he's already building, right? And if you're building, you don't have the time or the resources to pull permits and start building more. You got to get through the inventory that you're starting and then start maybe pulling those permits. So the permits number is a little bit of a wanky number. And sorry, that was the Canadian housing starts and building permits. But anyway, at the end of the day, we don't talk a lot about Canadian economic data points. That housing starts is a Canadian economic data point. Sorry about that. And then we got a plethora of FOMC members speaking today. We got Bullard, Quarles, and Powell all speaking today. So they're going to be probably talking about how the economic outlook looks. And with the data we've been getting, there is no real reason to start lowering interest rates. I think that they're going to hold off probably for the remainder of 2019. But I've been talking about that since almost 2018. So back in 2018, I was saying they probably should hold off on that last move headed into Christmas. Well, they probably should have at this point, but we're starting to see. They didn't. The market is trying to absorb all of that. It has slowed the economy, which is what raising interest rates do. It slows the economy. It keeps people from spending. Well, they've gotten that, and I think they've done it a little bit too much. We're going to have to really grind through this. That being said, I don't think that they're at a point where they really need to lower interest rates. I think that they just should have held off to allow our trajectory to keep going. Anyway, let's move on to the overall markets. We've got crude oil moving higher here today, testing that $58 a barrel area we've been talking about time and time again. Market's gone up there, tested that area, and has been rejected 3 times in a row, as we'll see here as we look at the chart in a little bit more detail. You can see yesterday's move right there, making it look like a little bit of a top pattern. It actually blew through the 58 and tested the 59 area. Came a little bit short with the SMAs, the 50-day and the 200-day SMAs lining up all right there at this $58 a barrel. So that is going to act as a major resistance. Now I've got a lot of things coming in, putting downward pressure on this market. Like to see it again move down to $52.50, about another $5 drop. That will help us out at the pump. It'll make sure that most of the U.S. is below $3 a barrel, and we can move on with our lives, right? We can get this economy really starting to get some traction. All right, gold is in negative territory, albeit it is higher than it was off of the open of the overnight session. We're down just about 50 cents, but we did test unchanged earlier, and that kind of lining up right there with that $1,400 or $1,400 a troy ounce area. Excuse me. And again, sorry guys. Again, we're seeing support right here in and around this area, which is, you know, back and forth trying. It's really a battle over that 1400 area. You know, we start getting down to test that 1400 to go below it. That's where we're really starting to see some major money coming into that area to try and defend it. So we get peeled below that, and that's when you start really seeing aggressive buying going on. Now, I've talked about this before as well. I expect this area to kind of get filled in before we really start making a move to the upside. We may try to, but I think that the market is still eyeballing that as a area that needs to be traded, right? Bonds, you know, they're off about a half a point right now on the day. Yesterday's market made it look like we were trying to build a bottom, and again, right here around this 154.22 area where we've got lined up with our Fibonacci extension, the 61 fib, you can see boom, boom, boom. I mean, I can just almost nail every single one of these as finding support around this area. So that is going to be a key number right there that we need to look at. All right, so 54.22 has been a major area that we are looking for the bulls and the bears fighting over. I don't think that the market can continue higher. I think that a move this way is probably not going to happen, because I think that interest rates are not going to go lower. We've talked about this before as well, right? If we have the price of the bonds and we have interest rates here, we have a teeter-totter. And as interest rates go down, that means the price of that bond goes up, right? So this is the teeter-totter, and interest rates are going down. That means the price of the bonds go up. That is a reflection of this. If the price of the bonds are going up, that means that the interest rate is going down. That is signaling to the Fed that interest rates need to go lower. I don't think that that's really what we're going to be seeing here. I think that we'll probably see a sideways and the market to start rolling over just a little bit to the downside, because I still do not see a reason for the Fed to lower interest rates at this point in our economic cycle. It's just really not showing recession right now. All right, on to the VIX. They are trying to move higher by a few teenies. We are in the teens here. Now, Dow Jones off by about 100 points. It was a little bit lower, came down, tested the value area high. I was actually thinking today that was going to be the day where we came back into the value area. But we have rejected that area and started moving higher. The bulls are defending it. You can see it here again in the NASDAQ. NASDAQ up at 30 points on the day, but again, came down, looked like we were going down into the value area again, where the most time and volume has been spent. As a matter of fact, where you see these two lines like this, it's just like a Fibonacci, or it's just like a standard deviation curve. 70% of the time and volume are spent within these areas here, okay? So that's where it's a comfort zone. We rejected that. So that is pretty bullish as far as I'm concerned. It's looking like we're gonna wanna sit there and move a little bit higher, but the market wants to come down to this area, I believe. I think that that's a sweet spot right now. We're talking about the economic cycle not being robust. The market wants to move higher off of the Fed lowering interest rates. I don't think that it's going to have a major difficult time moving higher with the economy that we're in right now. I think that the economy is, sustainable at a, regular pace. It's just not outpacing anything. We're not seeing frothiness or anything like that, and we're not seeing lethargic economy either. So I think that the market could continue to trend higher. I do still believe the market wants to come back down to the point of control and settle down there to figure out what's going on, but we are seeing some drive to the upside, and I think that that's because what was it, 2-3 weeks ago, everybody and their brother was crying that the market was overdone and the economies were going to fall apart and stuff like that. Well, we're really not seeing that. All right, let's look at the E-mini S&Ps on the 15-minute chart. You can see overnight inventory got short, really looking like we were, yesterday's market made it look like a confirmation to a move to the downside, but we got down there to the value area, and that's where the momentum started picking up to the upside. And the fact of the matter is the day session really wants to print the overall range of the overnight session. They went up to test that high, so flushed out all those shorts. So the weak hands were flushed out. We've rallied. Now it's going to be the rest of the day really to kind of watch it. They've gotten their mandate, flush out the overnight inventory, get rid of those weak hands positions, and then make your move. And we're going to have to see how that's going to line up. It's really looking like we're finding a bottom here and wanting to move higher, though, throughout the day. And that's about it for today. That's all I've got. I haven't added anything or taken anything off yet. Still trying to keep an eye. It's just very difficult to find a directional move in this, and I really want to sell some premium. There's not a whole lot out there outside of GLD for premium selling strategies, so I'm gonna hold off right now. I've got so many premium buying strategies in my portfolio, and to be honest, just like I figured, they probably aren't going to work out. Low probability strategies, but I need to mix it up as we talk about that. Those are some of those ones that when I put those premium buying strategies on, I look at it like I'm probably going to lose that money on those, but you need to have some of that alpha in your portfolio in case anything crazy happens, which is why I'm trying to always mix it up. Despite the fact that you are maybe very sure of your directional assumption, you always have to have some stuff in that portfolio to hedge yourself on a move that you are not expecting. All right, so that's what I'm trying to do with all of mine as well. All right, that's all I got for you guys. Check out Thursday's webinar. We're moving on to iron condors, stuff like that. Yeah, I know some of you guys trade in your IRAs, or maybe even in Canada where you can't really do naked strategies like we've talked about with the straddle and the strangle. I'm going to show you how to build those strategies out similarly with defined risk, so that you can implement those in your portfolios. And they're really great if you have a lower tolerance for risk, or you are a newer to options trader. All right, that's all I got. If you can't take that, take it easy.